Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we're going to look at the NASDAQ QQQ correction that is going on for the last 3 weeks. This is a chart for a whole year on a daily basis. I want to bring your attention to this correction that we saw in September, October, and November. Because what is going on since February 16th, that's when the market peaked, is very similar to what we saw back in September. So let me just walk you through what happened in September. I'm using these lines because it helps to understand. So here we have the lines coming down here. So this is like A, B, C, and C. And then we have A, B, C, and C. And then we had A, B, C, and C. The B wave always takes longer than the A or the C waves. If you look at here, what we have is a similar pattern of a wave coming down here all the way. And then we have A, B, C, and we C. But the C is not complete yet compared to, and this is where we are. And this is a point maybe somewhere at the upstroke of this particular point here. So keeping that in mind, what can we expect going forward? It's possible we might have hit the bottom because the C wave amplitude is almost similar to the A wave amplitude. Or it's possible that we may have another final leg to come down, and we look at the 60-minute interval chart and see what's going on. At the same time, a few other points, and as you can see, the short-term moving average has crossed over the long-term moving averages. It is at the lower end of the Bollinger Bands, and the stochastic is almost at 12.25. So all of these things indicate that we may be approaching the bottom, but again, as you can see, it hit the bottom here and then went up, then again it came down, and while it was coming down, it continued to go up and then continued onwards. So let's keep that in mind. Just because it is reaching a bottom doesn't mean that the market is ready to bounce back. So let us go to like 3-month interval. Let us look at the 60-minute chart. Then we have a pretty good idea as to what's happening. So here's where it peaked, and when we expand this to an hourly chart, it has a little different picture here. As you can see, wave 1, 2, 3, ABC 4, and 5. That's the A wave. Then we had the B wave, which was the typical ABC. Then here we have the C wave. C wave is not clearly defined as such, because if you look at 1, 2, 3, 4, 5 days, it took 5 days for it to drop. And here so far we had 1, 2, 3, 4 days. So I wonder whether this is a beginning of a whole new trend, or whether this is a replication of what we're going to see here as the ABC of the fourth wave, or the fourth wave of the C wave, before it takes another nosedive, and then hopefully the market will come back up. So if we are talking about this going up and then coming down, we already spent 1 day here, so we may be looking at another couple of days here if something were to change drastically, and that's where we need to keep our focus on. There's a support at 292. And let us see if we can expand this. And this is, it came up to 308 and change. And I think it's meeting the resistance at 309. And we have to see if this will continue to work its way like here, go up, and then perhaps come down. Hopefully, maybe it dropped as low as 304. And it may drop close to 300 if this wave was to continue, or if this wave were to be the new beginning of a B wave of this correction, then this is what we're going to be expecting, going up A, B, C, and C, then followed by this. There are some positive news despite this horrible bond rates just jumping out of nowhere. Fed Chairman Powell is pouring fuel on the stock market on top of that. The main thing is now the earnings seasons is going to start. Most of the stocks move in the last 3 to 4 weeks. So this is going to be the second week of March next week. We may see some positive movement here because of the stocks which are going to be going up. I mean, that's my assumption, because Apple, Amazon, Tesla, Facebook, every one of them have been beaten pretty good. And they all have reasonably good earnings, so I expect this to sort of bounce back. Even if it's a couple of days later, I would expect it to bounce back and then maybe retrace what we have seen here. And once the earnings season is over, and once we reach a top like this of the B wave in this correction, then it's going to be anybody's guess as to what's going to happen here. So the things to watch for the next couple of days would be whether this uptrend will continue with like upstroke and a correction, upstroke and a correction, upstroke and a correction, or whether it wants to retrace the final limb of the C wave, which is now we already got the 4, and if it has to come down, it will be wave 5. So that's what I think is happening. As I said, it did not pass the resistance level, which is at 311. That's something we need to watch. And if in the worst scenario, it may be coming to like 292. That's the support level. What do you think? What do you see a prediction? Do you expect the stock market to go up in the next couple of days? Or you think it's going to take a turn down for one more time? Let's go to a smaller time frame here, like 10 days, and go to hourly chart. Okay, let me bring up candlesticks, which most of you are used to. But usually people who follow Elliott waves like to use these waveforms. That's why it trims off all this extreme movements in the stock market and kind of make it more practical. Okay, here's oh, I thought I changed it. Anyway, if you look at it, here we have 1, 2, and 2. This may be the third wave, and the fourth, and the fifth, or this could be just wave 1, and this could be all wave 3. And what we are looking here could be A, B, C, and then 5. Which probably is going to take a couple of days. So brace yourself for whatever is going to happen, because it's going to happen whether we like it or not. And let me bring up the candlestick. I'm sorry. Filled candlesticks. Okay. Let me go back to 30 days here. Okay. Here's 1, 2, 3, 4, 5. A, B, C. Then we have 1. You can say it is 2 here, and 3. Or it could be 1, 2, 3, 4, 5. But it has to have a little more price movement for the correction waves, which are generally longer than the impulsive waves. So I am guessing that we may be taking another dip here, but maybe the less time. I hope. I don't know. What do you think? This is just my interpretation. This is not an advice or recommendation to do anything. This is for educational purpose only. And please do subscribe to our channel, and we'll talk to you next week.